Thank you for checking out Real Talk Personal Finance. Shit's about to get real. Cash Flow King with you today, and today in episode 22, Passive Real Estate Investing mini-series. That's right. We are doing another mini-series. Hopefully you listened to and enjoyed the one on annuities. If you haven't, feel free to go back and check it out. Good information there, some good content there if you really want to dig in the weeds on annuities, whether that's for you or somebody that you know, especially those that may be approaching retirement. Some really solid information baked in there, in addition to a couple of other sort of supplemental type of episodes like the 4% rule and the last one we did on Social Security retirement benefits. Just trying to get some really good information out there for everybody. So feel free to go back and check those out if you haven't already. As always, thank you for tuning into the show. We greatly appreciate it. Feel free to share the show with friends, family, coworkers. It looks like our listenership numbers are continuing to go up. So again, shout out to everybody today. I'm not going to name any location specifically, but the numbers are growing everywhere. So we certainly do appreciate that. And please continue to enjoy the show, share the show. And if you would be so kind and you feel like we've earned it, consider leaving a 5-star rating and review. So I've been in touch with Travel Queen, and she is going to come back on the show, so she tells me. However, we've had to reschedule a couple of times, and at least in one of those instances, it was because, well, you guessed it, she was traveling. So we are still trying to record a follow-up episode to the initial one that she was on, and that will be coming out at some point in the future. I know I've mentioned it on a couple of shows now. I initially was planning to record and publish that episode as the very next episode on the podcast. However, for those in the fire community, you can probably appreciate this. I have about 37 minutes left in my cycle, which ends in just a couple of days. As far as the podcast cycle goes, I get so much time every month to upload different podcasts, and I have a certain amount of time that I can upload. And it didn't look like I was going to be able to get that episode out first. And also, I think that it will go significantly longer than 37 minutes. So I thought I would go ahead and start with the Passive Real Estate Investing mini-series. This episode here, episode 22, almost as an intro episode. And in the meantime, I am going to continue to try to get that scheduled with Travel Queen. We will record that episode, and I may hold it until the end once the Passive Real Estate Investing series is over, or I may just go ahead and drop it somewhere in between. So know that that is coming, and these next several episodes may slightly go out of order a little bit. You may have a Travel Queen episode baked into the real estate mini-series. It is what it is. So anyway, in today's episode, I just want to go through some really basics, I guess you could say, and answer some general questions on real estate investing in general. So that's where we'll start. This will be a relatively quick episode. And then in the next couple of episodes, at least as the ones that relate to real estate, we will focus on specific topics. And so far, I have at least 2 of those. I may have a brand new guest to the show. We did have somebody that's been in contact with the show that I know is involved in real estate investing, or more specifically passive real estate investing. So I've asked that individual whether or not they'd be willing to come on the show, and they're currently thinking it over. So we have hopefully 1, if not maybe even 2 guests coming up for you soon. Hopefully you guys enjoy that. I'm sure you're tired of listening to just me on the podcast. Cube Crusher probably will come back on at some point. So we're trying to mix it up for you and still, really enjoy this and get some good information and content out there to you. So today's episode is, again, the intro. The first question that you might be wondering is, well, why real estate, right? Are you looking for a get-rich-quick thing? And if you are, you're in the wrong place. That is not what we're really going to talk about on the show, and in most cases is not really how things work. There's a lot of people out there that like to promote their course or their ebook or whatever bullshit that they're selling, and look at these cars and this money and these women and all these things, and you could be rich too tomorrow if you just follow my program. Well, that's not at all what we're going to be talking about on the show. And so be very skeptical if you see some of that stuff out there. But why would somebody in general consider investing in real estate? And there may be a multitude of reasons. I have a few listed here that I'll go over, and there could certainly be many more than these in terms of why somebody might consider investing in real estate. And when I came up with this list, specifically, I looked at it from the context of my own personal situation, but this I think can apply more broadly to other people as well. See what you think as we go through. The first reason might be that you want some sort of investment that is not necessarily one-to-one correlated with the stock market. So they could generally trend in similar directions, but most types of real estate investments are not going to have the day-to-day gyrations that you might see in the stock market. They're not necessarily going to be directly correlated with the stock market. And even in working with clients in my role as a financial advisor, any client that I've ever worked with that also invests in real estate, I don't know how to put this in any other words other than they really don't seem to give a shit about their stock market-based investments. That's just the reality, because in most cases, their real estate is more than adequate for what they need. It takes care of them. It will continue to take care of them. It's a generational wealth type of thing. And the last thing that they're worried about is the ups and downs of the stock market. On the other hand, clients that typically do not have real estate exposure are normally the ones that are way more worried about what's going on in the day-to-day stock market, because in a lot of cases that may be all that they have from an investment standpoint. So I think a lot of people, myself included, would want something that is not necessarily directly correlated to the stock market. So that might be one reason to consider investing in real estate in general. Another one would be, and again, people invest in real estate for many different reasons, but one thing, if you listen back or go back to the episode that I did with Cube Crusher on cash flow investing versus growth investing, you can certainly have both, but generally speaking, real estate investments have a tendency to be more cash flow heavy in a lot of instances. And so one reason somebody might consider investing in real estate, and I know this is one of the reasons that I did, was for the different income streams and income potential that would be available. And there's different ways to look at this, but if you look at income streams that you might receive from real estate investments or real estate related investments, generally speaking, those are going to be higher than what you may otherwise find in the stock market, right? So if you just had, depending on your portfolio, certainly there's some securities out there that are, have a higher yield than others. But if you took the average stock market based portfolio for an average individual and you put that up against the average real estate investment portfolio for an individual that's investing in real estate, and you just looked at the income streams, there's always going to be exceptions, but I would venture to guess and argue that generally speaking, the real estate investment portfolio for the same dollar amount is going to produce a much higher yield from an income stream standpoint than the stock market is going to be able to do. So that's something that was appealing to me, and I think is appealing to a lot of people. Again, not everybody invests in real estate for cash flow. A lot of people do. Some of them don't. We'll talk maybe more about that on some of the other shows that are coming up. But that is another thing to consider, is the income stream. Along the same lines, I think that investing in real estate, for those that are a part of the whole financial independence, retire early, or the FIRE community, I think that it's very FIRE friendly. And depending on how you're investing in real estate, there's different ways to do it. We may touch on something called self-directed retirement accounts in some of the upcoming episodes. But for the purposes of today, there are certain restrictions and ways that you can invest with retirement dollars in certain types of accounts, like self-directed retirement accounts. And there's different account types out there to be able to do that. But I think the vast majority of people are investing in real estate. And I know I am personally. Well, actually, I do a little bit of both, but the majority of my real estate investments are going to be funded with dollars that are outside of retirement accounts, which means that if I'm investing with just outside dollars, it's not tied up in some sort of special retirement plan, that it's FIRE friendly from the standpoint of I don't have to worry about age requirements to benefit from those investments. In other words, I can invest in a certain type of real estate investment with money that's kind of just chilling in the bank. It's not in a retirement account, and I can benefit from that investment now and later, not just having to wait till later. There's no age restriction. If it produces an income stream and that income stream comes in now, I can benefit from that income stream now, whether that's for consumption purposes or reinvestment purposes, whatever the case might be. You're not going to have a lot of the rules that you may otherwise have with other types of investments. Now, you could make the argument and say, well, I could also take money that's chilling in the bank and put it in the stock market and build a dividend-based portfolio that produces a yield, and I can also benefit from that now. And that's true. You absolutely could do that. But I'm just thinking from the standpoint of different types of investments that exist out there. Again, real estate has a tendency to be able to produce, at least from an income stream standpoint, a yield that may be higher than other types of investments. And If you fund it with just, everyday cash, it's not tied up in a special type of retirement plan, you have the ability to benefit from that earlier. So it is very conducive to folks that may be in the FIRE community that are trying to achieve a level of financial independence where they can benefit from the income stream now versus having to wait until a particular age. I think that might be another reason that especially a lot of the younger people consider investing in real estate. Real estate has a lot of different tax advantages. We may get into some of those as we talk through the different episodes and talk about the different types of real estate investments that exist. Again, quick disclaimer, we don't give tax advice, financial advice, legal advice. We don't give any advice on the show. So this probably goes without saying at this point, but we'll hammer it home anyway. Please don't misconstrue anything that we say on the show in any episode as advice. Always seek your own guidance from your own professional. But with that said, there are a lot of different tax advantages, some of which pretty much everybody can benefit from, and others, depending on your classification, we'll maybe talk about that in some of the upcoming episodes, you may be able to benefit from certain types of real estate investments more so than others. So no matter how you slice it, there's almost always going to be a tax advantage for pretty much everybody that invests in real estate. Some are going to have bigger tax advantages than others. Having something that is a tangible asset, so depending on how you invest in real estate, and again, I keep alluding to the other episodes because we'll talk more specifically in those episodes about what that looks like. I don't want to go too far down any rabbit hole today, but suffice it to say that in some way, shape, or form that you will be investing in tangible assets, real estate related, real property, and some people just like knowing that it's a little bit different than a paper asset. It's not just a number on a screen. Like, depending on what you're investing in and how you're investing in it, you can probably physically go reach out and touch the real estate itself. So it is a tangible asset. Also, it's a pretty good inflation hedge in general, right? And it doesn't take a genius to figure that out. I mean, if you look at the most obvious right now, just with the housing market the way that it is and home price appreciation the way that it has been, you can reach out and touch the bricks or the vinyl or whatever on the side of your house or any house, rental house, primary residence, doesn't matter. Chances are in the past several years, the value of that has gone up for, it could be a whole host of different reasons, but in general, in almost all cases, is going to be based on market-based appreciation and where the housing market has gone. So that is another way to hedge inflation, especially if you look at just inflation in general, which we've talked about on probably the past several shows, maybe even hinted or touched on it in almost every single show that we've done. So inflation for a lot of people right now is either a problem, depending on how you look at it, or at least top of mind and at least somewhat concerning. Real estate investing is a way to sort of hedge against that and own an asset or assets that do provide sort of a natural inflation hedge. So again, I'm sure there's many more bullet points. Those are just a few that I came up with on why people might consider investing in real estate in general. And so the next thing I wanted to talk about is just active versus passive real estate investing. You'll notice the name of this episode in the mini-series that we're doing is on passive real estate investments. That's what I am most familiar with. And in full disclosure, I don't necessarily consider myself to be an expert in these areas, but it is something that I am sort of doing and have been doing for the past handful of years. And so that's what I can share my somewhat limited knowledge on, and at least give you some things to think about as you might explore this for yourself. But there are a whole host of people that do sort of a different type of investing, which we're really not going to talk about on the show. And I think it's important to make this distinction for a couple of reasons. Number one, so you don't get your hopes up for something that we don't talk about. And number two, that at least at a fundamental level, you understand the difference. So I've been known to say that I'm probably the most ambitious, lazy person that I know. I like to essentially do something once and get paid forever. I don't want to have to be involved in the day-to-day and, the sweat equity and all those sorts of things that you hear people talk about. That's just not me. I could barely change a light bulb or swing a hammer. And again, if I didn't find passive ways to invest in real estate that we'll get into in detail in the upcoming episodes, I wouldn't be investing in real estate at all. So the last thing that I wanted was a second job, right? Hence the whole underlying theme of investing in real estate passively. Just because you invest passively doesn't necessarily mean that you don't have certain skill sets, but for one reason or another, you just may choose to invest in a passive fashion. Maybe you have a really good job, or you own a business that's very profitable and lucrative, and your time, if you want to look at it from that standpoint, dollars per hour, however you want to quantify your time, is much better spent doing that work either in that job or in that business to generate income that's going to be significantly higher than, something broke at a rental property, or, I have to do this or do that, where you could easily hire out a lot of that stuff in their lower dollar per hour tasks. We won't go too far into that today. For those that are fairly well established financially and have a really solid financial foundation and baseline, you really could go in either direction. But I think the vast majority of those people are going to look at passive real estate investing, if they decide to invest in real estate at all, is the method and route that they're going to go. But with that said, there's also other people, some of which are very financially successful and stable and all of those things, and some that are just getting started and pretty much are broke and have no money, that may choose to go the more active route. So again, I was not personally and am not looking for another job, but some people might be. They might be in a job where they feel like it's a dead-end position, or they're looking to get out. They don't like their boss. They don't like their hours. They don't like the lack of flexibility that they might have. And they want to get into something and do something completely different. That's okay, but that's going to be a very, very different type of investing model and thesis than what we're going to be talking about on the next few episodes as far as passive goes. So for today, let's just get the active part out of the way. And this is not exhaustive by any means, but there's a couple things that come to mind when I think about active real estate investing. So one of them, and if you go on YouTube or TikTok or whatever the fuck you listen to, you may hear people bragging about how much money they made on this deal and no money down, and I didn't need any money, and I flipped this contract, and I go out and I'm a bird dog for somebody else, or I'm driving for dollars or dialing for dollars, or find dilapidated properties and put them under contract and then flip it to an investor. A lot of people that are talking about things like this and making gobs of cash all at once are referring to what's called wholesaling. And depending on where you live, the legality of this can be questionable at best. I'm not going to get into any of that. So, do your own due diligence. I'm not suggesting anybody do anything at all, just trying to explain what this means. And if you've ever driven down a busy road or got off the highway at a particular exit, and then all of a sudden you pull up to a stoplight and you see like a little, almost like a picket sign in the grass that says, "We buy houses, call us at 1-800 whatever." Those people on the other end of that are wholesaling. And they are looking for typically distressed properties, people that for one reason or another need to sell. They need to sell quickly. Oftentimes they might be able to sell at a discount, and they're going to try to get those properties under contract at a very, very low price. And in some cases, they might keep the deal for themselves. In other cases, they might flip it to an investor. But really, at its core, what they're doing, and they might in some cases be making great money doing this, and this isn't a shot against anybody that might be doing this or considering doing this. It's not something I'm personally interested in, but you might be. But that is more of a form of active real estate investing. And I would argue that even though you could technically start your own and claim that it's a business, what you're really doing is you're giving yourself a job, right? You have to make the bandit signs. You have to put them up. You have to take them down. You have to have either yourself or somebody else that takes the inbound phone calls. You may have somebody that makes outbound phone calls. We'll talk about turnkey rental properties in one of the upcoming episodes. I get at least 2 or 3 phone calls a day from people trying to buy my properties from me. And there's people out there that that's what they're doing. That's the job, right? There's nothing, again, wrong with that, but I don't have any experience doing that. I don't have any interest in doing that. That is not one of the upcoming shows that you're going to hear about. You're just going to hear about it briefly here on this intro episode. But wholesaling would be considered by many to be an active form of real estate investing, if you want to call it investing at all. Because in some cases, in most cases really, you're not actually going to hold that property. You're not actually going to benefit from a lot of the things that real estate can provide. You're simply looking for a deal and then giving that deal to somebody else and marking it up and making a spread in between. You're kind of the middle person, right? So again, nothing necessarily wrong with that. You may do that at first. A lot of people do at first to get started, to build up some capital so that they can later invest in other ways in terms of investing in real estate. But that is a form of active investing. Similarly, in some ways, you could argue that people that are flipping houses are also doing active forms of real estate investing. Either they're there or they're the general contractor on a job and they have different, crews that they send out. They're overseeing the project. Maybe they're doing the work themselves. The shit you see on like HGTV and stuff like that, where people buy an ugly house and they fix it up and then they flip it for a profit. And it looks glamorous. And again, people can make really substantial money doing that. There's also an awful lot of risk, in my opinion, with doing that, especially if you've never done it before, you don't know what you're doing, and you're competing against other people where that is their business, that is what they're doing full time. We'll talk in one of the episodes about, some of the properties that I personally buy, and, I buy from operations that are doing hundreds of these a year. And so if you're just Mr. or Mrs. new first-time investor and you want to flip a house and you're in a competitive market with some of these other large operations out there, not to say you can't do it, but more than likely at some point you're going to get crushed. And if you're doing that at the beginning of your real estate investing journey, where you really don't have an adequate baseline as far as financials go, you don't have adequate reserves, you don't have an adequate cash pile, you're trying to flip to make a pile of cash to then be able to invest in real estate. And so you're most financially fragile and you're taking on a high degree of risk and you are actively doing this. Again, the stakes are super high. Not to say you should or shouldn't do it. Personally, I wouldn't. I don't have any interest in it. It's not something that I do. Not something that I'm all that familiar with, other than, just my research over the years and figuring out exactly what I did not want to do. But there are people that do that and people that do that well. But again, I would argue that flipping is an active form of real estate investing. And again, it's almost akin to having a job or running a business, because you can make the argument you're really not investing at all at the end of the day. If you buy a house for X and you fix it up and sell it for Y and you keep the difference and that's your profit, all you've done is go from essentially cash to more cash at the end of the day, right? Cash, then to the property, then you fix it up, then you go back to cash, and hopefully you have more than you started with. And now you're back to square one, right? You don't really own anything. Where's the investment? And so I would say that that's another way for a lot of people to build capital. There's businesses that are built on this. There's companies out there like the one that I alluded to that pretty much flip full time to individual investors like me. And that works out great for them. But for the average person, especially for somebody just getting started, that may or may not be something you want to do. And again, that's a more active form of real estate investing, not necessarily passive. We'll talk in one of the upcoming episodes about syndications, and we'll probably touch on different types of funds that are out there. So those that are sort of general partners or operating different deals, you can make an argument that that is a more active role in real estate investing. And even sometimes for people that are self-managing their own properties, if they have their own rental properties, it may be more passive than the other methods of active investing I just mentioned. But at the same time, there still is sort of an active component of that. And again, we're not going to talk really a ton about that necessarily, although as I'm talking about this, there is an individual that comes to mind that I know for a fact self-manages properties, but might be able to get them on the show. I don't want to say for sure. We'll see what happens. That's what I said. This is kind of an evolving thing as far as this real estate investing mini-series. It can go in a couple of different directions. We may end up with no guests, and you spend the next couple of shows just with me talking about the nitty-gritty of different types of passive real estate investing, and that's fine. Or we may be able to bring on a guest or two to shed some light on some specific areas that they are investing in, whether that's more passively or more actively. But again, the whole overall focus of this little mini series is supposed to be towards passive real estate investing. But I just want to make the distinction here and compare it to more active forms of real estate investing so that you understand the difference as we go through. So again, the wholesaling, the flipping, operating, self-managing, all those forms are more active forms of real estate investing, not passive forms. Active, think of activity. Passive, think of cash flow king and being lazy and still making returns. So that's pretty much what the mini-series is going to focus on, which is the latter of the two. Next thing I'll say is it is important, in my opinion, to have a real estate investment team. And I use the word team fairly loosely just because it's not like you actually have to employ these individuals and start a business and have them on the payroll or anything else. But it's important that you build a team around you based on the types of investments that you're looking to do. And in no particular order, I would say that the following individuals may be part of your team, or at least you should consider to be part of your team, depending on what type of investing that you're doing. The first one is a tax advisor, whether that's a CPA, a certified public accountant, or an EA, an enrolled agent. You want to make sure you have a tax advisor on your team, and specifically somebody that understands real estate. They either invest in real estate themselves, they have other clients that invest in real estate, This is not your typical go down the street H&R Block or drive downtown and go into one of those tax places promoting that they're going to give you the biggest refund and give you an advance on your refund. Those are typically not going to be the places that you want to go. You are probably going to have to pay a little bit extra to have somebody like this on your team. And, different firms will price this out differently. So there are those that will generate and file a return for you, more of a tax preparation type of approach, which is certainly part of it, and that's fine. But where the real value is, especially for certain types of real estate investors, which we'll probably get into in the next couple episodes if we talk about real estate professional tax status, are those that can benefit from tax planning, more of a proactive approach. And so depending on what that looks like, different firms price differently for that. Some of it's more of an a la carte type of deal. You pay for what you need. Others, it's kind of an all-inclusive type of pricing where you're going to pay whatever their fee is, and that might include tax preparation, and it also might include tax planning all in one. But no matter how you slice it and dice it, if you're going to invest in real estate in any capacity, whether actively or passively, you're going to want to have a tax advisor on your team, whether that's a CPA, enrolled agent, or somebody else who knows what they're doing and has experience with real estate investing and investors. The next one might be an attorney, again, depending on how you're investing in real estate. For those of you that are going to be more active and you might get into syndications and running a syndication on your own, you're probably going to want to have a real estate attorney that is familiar with syndication law and securities laws and things like that. For those that aren't really looking to be that active and kind of like me are more passive, you may at a bare minimum just want to make sure that you have just your basic sort of estate planning attorney for entity structuring and making sure that you have an operating agreement and that you're protected from the legal angle. That can be different for everybody, but a tax advisor in some capacity, a legal advisor in some capacity. And then for those, again, depending on what you're investing in, if you're not going to be hands-on, you're probably going to want or need a property management firm to handle the management of properties, depending on, again, if you're doing single families, if you're into apartments, and we'll talk more about all that in the upcoming episode. So that might be somebody or a group that you're going to want to have on your team. Depending on how you're acquiring properties, especially if you're buying individual properties, you may want to have an agent, or in some cases you may not need an agent. You may want to partner with different operators, whether those are operators that are helping you to buy individual properties or flipping those individual properties to you, or those are operators that are operating large-scale syndication type deals like apartment buildings and things like that. So if I look at this list, personally, I have a CPA that I use as my tax advisor, okay? And that person specializes in real estate investing. In fact, about 70 to 75% of that person's clients are real estate investors. So they understand the space very well. And I will say that I pay them a small fortune, but it's probably money very well spent because taxes for most people are going to be your biggest expense. The next, when it comes to attorneys, I don't need a securities attorney. I'm not raising money. I'm not a syndicator. I'm not trying to go out and do bigger deals and, get my hands dirty and boots on the ground. But I do have an estate planning attorney that I use for my entity structuring and operating agreements and have discussions about, potential legal exposure, liability, things like that with. That's part of my team. I don't have a real estate agent, not to say I've never used one for primary residence, but when it comes to the types of real estate investing that I do, I am more so working with operators, and those operators are a combination of syndicators to fund managers to essentially flipping operations that have their own in-house property management team. And we'll talk all about that stuff on the upcoming episodes, but you may or may not need that. I could be missing some folks on the team here that you might need depending on the type of investing that you're doing. You may also, I didn't put it on the list because I am one, but you may decide that you want or need a financial advisor. However, cautionary word here, most of us in the financial services industry do not necessarily focus on real estate investing. I think that's one area that I can kind of bring some different perspective to clients that might be interested in real estate. We can't promote anything. We can't sell them any sort of real estate related stuff. In fact, most advisors are probably going to try to discourage clients from investing in real estate because they want those dollars to be under their management so they can typically charge fees on that if they're on an assets under management or an AUM type of model. So just be careful out there. But, again, in our industry, it is not very common for advisors to focus on real estate, but you may find, a certified financial planner that you can basically pay them a fee to do a plan for you that understands real estate and different components of real estate, and they can factor that into your plan and help you with that. That might be a route to go if you feel like you need a financial advisor. And I'm not saying that you do, you may not at all. Other people say the hell with financial advisors, are all a bunch of crooks. And you could say the same thing about a whole host of other professions, and we won't go there. But there's some good ones out there, and some that really aren't able to do all that much or really don't know all that much. In fact, I was on a webinar one time, an internal webinar, and somebody had asked a question. There was one advisor who was doing a webinar. Essentially, it was across the country, countrywide at that point, and there were some other advisors, such as myself, that were sitting on the webinar. And I remember somebody had written in a question in the Q&A and asked about real estate investing, and his response was something to the effect of, well, if you own your home, you already have real estate exposure. And I just did a face palm and just wanted to say a whole bunch of things that I refrained from saying, because clearly that person had no idea what the hell he was talking about. But anyway, I digress. Last point here that we can incorporate into this mini series, if you'd like, is going to be real estate Q&A. So if you've ever thought about investing in real estate, or you already are investing in real estate, or you're familiar with one type of real estate investing, but you're not necessarily familiar with other types of real estate investing and you want to know more about it, I am going to open it up. If you have any questions, we may do a real estate Q&A show as part of the mini series at the end, and certainly integrate some of that information throughout the upcoming episodes that we're going to record, because at this moment in time, they are not yet recorded. Feel free to send an email to realtalkpersonalfinance@gmail.com. Again, that's realtalkpersonalfinance@gmail.com. And we will try to entertain those and incorporate those into the mini-series. So again, I do the show for shits and grins to entertain you guys. Maybe one day I'll throw an ad on there or something to make a couple pennies off of it. But right now, we're not charging for anything. We're not selling anything. We're not making any money on this. In fact, it costs me money to host this damn thing every month. But I do it because it's fun. I enjoy it. I hope you guys do too. Thank you for listening. Feel free to share the show. Leave us a 5-star rating or review. And don't forget to tune back in. We will see you in the next episode.
Check the mic and make sure it sound right, boys.